Hello, everybody. Hold on, I gotta turn off my volume on the other computer. 1 second, guys. Technical hiccup. Turn that off. Okay. All right. All right. Sultan is having some tech issues also, is running a little bit late. So, all right, let's go, guys. So welcome to another weekly meetup for those of you who are new. And also these recordings, by the way, are going to be going up on social media after initial 7-day embargo period. So what do we do with story trading? We beat Wall Street insiders at their own game through crowdsourced collaboration, understanding, which leads to an understanding of the story behind the trade. And of course, access to management here in the VIPO program to get an extra edge. We are building our own app scheduled for July release. We'll tell you more about that as the time approaches. So for tonight, we're going to go over performance of our featured presentations, and Sultan's going to come on with his pick. Rob Mock's going to have a pick. We'll go through our schedule after that. And then for those of you who want to hang around for Trade of the Week, we'll do that, go over the winners and pick some stocks for this week. Quick disclaimer, story trading is not an investment advisor. Investing in securities involves significant risk of loss. The formal presentation will be recorded. The Trade of the Week will not be recorded. We'll be providing the recording for our paid members throughout the week, and then it'll go up on social media after a 7-day embargo period. So with that, we're going to go over performance a little bit different this time. What you can do is hop on over to storytrading.com. We'll do it on the screen share here, but just throughout the week, and just click on that performance tab. And that's where you can keep track of all the featured presentations. So actually, we'll do that right now together. Let's hop on over here, storytrading.com. Click on performance. And right over here, you can see all the performance of our featured presentations. This was the Friday change versus the QQQ. We've attempted here to compare to Cathie Wood's ARC. So we have to figure out how to do that. It's not easy to do the comparison, but this is what we've come up with so far. We have a average of 78% return over 143 days on each of these picks that are still open. And these are the 4 picks that were closed now. So you can look at that. We got return by presenter over here, which is pretty interesting. I think Sultan's coming up. I don't know if he's on yet, but he's up at 93% behind Dan Carlson. Something interesting to look at. This annualized number is not to imply that you're actually going to get this return if you hold the stock for a full year. The way this should be used is an indicator of the presenter's timing, right? If they got a quick move after the presentation, you know, they have perhaps their finger on the pulse of timing better than some of the other presenters. So that's a value we're looking at. We can see, even though Aaron Warwick is down here at 84%, he's done it in much fewer days, is at 320% annualized. So that just tells you a little something about his timing, which really brings him up close to Dan Carlson's performance. That's another way of looking at it. And, you know, we do want to, again, reiterate over here that story trading is not a financial advisor, and past performance is not a guarantee of future results, because this is pretty incredible. And I can't imagine that it's going to continue like this. But, you know, hopefully once things settle down and return to more of a normal market, we're still going to be able to outperform the market. So congratulations to all of the featured presenters. Rob wanted to present DNN tonight. Before he does that, just a quick thank you to Florian a couple weeks ago for presenting the whole uranium idea in this sector to the community. So with that, let's pass it over to Rob.
Thanks, Ben. And thanks, Sultan.
Yeah, thanks, guys.
Can everyone see my screen?
Hold on, let me stop my share.
Oh, you are sharing. Okay.
Yeah. Okay.
Do I have to stop sharing and reshare?
No, we see you. Go ahead.
Okay, perfect. So yeah, the timing on DNN. So I got in DNN about a week ago after after Florian's presentation, along with entering Palaf as well, one of his favorites. And then Chris Hampton mentioned there were very high call options on DNN. So I did some research into it from a lot of different angles, and I took I have a large commons position, then a smaller call position for March, kind of following whoever else took that 250K position. And it ran from about $1 to 180 quickly, and now it's dropped to 120. And I see that as kind of a low price and a good setup to either get back into commons or get like a speculative call position. And that's why I decided this weekend I should present it, because you may not be able to get it in this price after the next few weeks, or it could keep going down, but I see it as kind of very good risk versus reward uranium play based on the things Florian said last week. So I'll jump into the presentation. Let me just minimize a few things so I can see everything. Okay. So this is going to be a little wordy, but the product they have is uranium. Denison Mines is the premier Canadian uranium project developer and uranium asset house. Uranium that is focused in the Athabasca Basin and uranium region of the Saskatchewan, Canada. Aside from vast exploration grounds, lower priority uranium projects, and notable ownership interest in McLean Lake mill facilities, what Denison is known for is they're focused on the attractive Wheeler River project. It contains two notable uranium deposits. One is an ISR project. ISR is going to be the type of mining they do in Phoenix, and another conventional underground Gryphon deposit. I'll talk about those later, the size and the value. Both projects have material scale to the global uranium market while having more favorable capital expenditure and permittability over the basin peers. Because Denison is part of the London Group, the company draws upon significant expertise from operations to regulatory to extensive finance capability, thanks to a group of proven operating businesses that span the bulk of natural resource sectors. And Denison is a strong position for executing successful new build while being aligned with cycle timing. So that's just a basic overview of what they do. They're basically in the exploration stages of mining right now, and they're focused on uranium. Market cap is 847 million, shares outstanding about 712 million, warrants 22.8 million, cash about 55 million. So now here's kind of fundamentals. The Wheeler River feasibility study. The study was completed in 2018, but the reason it's still relevant is because the current uranium prices are pretty close. I think they're pretty close to $30 in 2018, and they're still about $30 now. So most of these numbers are still very relevant. There has been a few newer discoveries on some of these projects that show larger concentrations of uranium that could increase these values, but this is a good summation of current values. So taken together, the project is estimated to have mine production. This is for the ISR operation at Gryphon. Taken together, the project is estimated to have a mine production of 109 million pounds of uranium at a net present value of 1.31 billion. And the Phoenix ISR operation is estimated to have a standalone base case pre-tax of 934 million. And then this is an interesting thing. They have an industry-leading average operating cost of $3.3 per pound. So Denison is going to have some of the lowest cost mining in the whole industry. and has some of the largest deposits and high percentages of uranium. And they just raised approximately $30 million and should have sufficient cash runway till the end of the year. Here's some of the technicals. And so first looking at December, there was enough accumulation December to push through the 200-day moving average. I started following this more recently, so I don't know the exact reasons of the run up in December, but I think the prices started running, was it January to February was the run up in prices. Recently, there was a massive volume spike in both commons and calls in February, following an 8 times oversubscribed cash raise and updated drilling results. That was the recent run from about, I think, 80 cents up to $1.80. And I watched some videos and studied and talked to a few technicians or technical analysts, and they said 115 is the current resistance level and maybe a good buying opportunity if this continues to run after it touches 120, 115. Currently, it hit about 120 on Friday. And then one interesting thing is the March 19th calls for 250 have 250,000 in open interest. I believe that took price at about $1. So someone's betting that the price is going to go up to at least, was it 275? I think three to 350. So they can kind of break even. Otherwise, they should have just bought common shares. So somebody was betting when this was at about $1 that it's going to run to like 350, which is kind of ridiculous, but it's a possibility. And then on 3/19, which was the last trading day, the RSI is increasing and currently at 64, and stocks are considered to be oversold at 70. So it's getting close to that. Or you could see it hit above 70 when it hit 180, and then it dropped back down to close to resistance at 115. And then sentiment. So a new thing that's come up lately is sentiment surrounding social media influencers and social media sites. I actually traded in GameStop and AMC, combinations of commons, calls, and puts, and I was watching them really closely to watch their behavior. And the last one I missed was Sundial, the marijuana company. Someone bought really heavy calls in that stock, and then some group of people came in and pushed up the stock to push all those calls into the money. So I've been waiting and looking for the next company where that's possible. And this company is a possibility. It may or may not happen. That's why you're probably better off with like commons in this company. But there's a possibility that this gets pushed up in March because of the high call open interest. So for sentiment, in the past week, this has been trending on StockTwits for watcher growth. It had 9K watchers about a week ago, and now it has about 20,000 watchers, which is a huge jump. And 20,000 watchers is a good base. You can grow off 20,000 watchers to like 60 to 100 quickly if you get a lot of attention, because those watchers are people that if the stock starts running or a big catalyst comes up, they start to cross promote and spread that stock everywhere through different channels. Then there's another, there's a Reddit room called Uranium Squeeze with about 2,600 users. And if you run through all their top articles, you quickly notice that DNN is their top pick. And the main reason they chose it as their top pick is they believe Denison Mines is going to start mining right when uranium prices are at their peak, which I'll go into a little later. And then there's on Twitter, there's Texas news, nuclear and DNN being discussed on Twitter over the weekend because of the power outages in Texas. There's going to be more of a focus on nuclear because nuclear is a more consistent form of power, unlike kind of solar, where if it's dark out, or wind when there's no wind. Solar is one of the most consistent forms of power that could be. I think one of the nuclear plants did freeze and have freeze problems because it wasn't set up correctly, but most of the time, nuclear power can provide very consistent power, and I'll go into that later on as well. And the last thing for sentiment, and this will be interesting, is last week when DNN went above 150, one of Wall Street Bet's rules is you have to be above 1 billion market cap to be a stock of interest on Wall Street Bets. This is Swaggy Stocks, and it tracks the top 25 most interesting and most talked about stocks on Wall Street Bets Reddit site. And as you can see, DNN hit number 23. I think it actually reached 21 at one point, but it was number 23 right when it went above 1 billion market cap, meaning if it happens again where DNN trades at like 150 or above, it can quickly run back to this Wall Street Bets, gain popularity, and there's a possibility of even making like the top 5 most popular stocks. And if that happens, you could see a large run on DNN calls and DNN stock. But like I said, that's a more risky bet. The better play is to just buy the commons because they're so cheap. Now, Dnn Catalyst, this is where things get interesting. So the company DNN itself is, I've talked to many people and they believe the company current stock price is probably worth about $1.80, and it ran to $1.80. So like, where's the story in the stock? What makes it interesting? So the interesting thing is if you look back at 2007 to 2008, uranium ran to $140 a pound. Uranium is currently trading at $30 a pound. If uranium runs to $140 a pound again, would dramatically increase the value of the assets that Denison Mines owns. And let's look what happened running up to 2007. You had China was promoting nuclear. You have Cigar Lake floods. You have Ranger Mine was damaged by a cyclone. And you see a peak price of 140. If you're looking over here at 2020, you're seeing Kazakhstan, which is one of the largest producers. Actually, let's go back a little. Fukushima, which was the large nuclear accident. Ever since then, there's been negativity around nuclear, and that's pushed down the prices of uranium. Kazakhstan, which was one of the largest sources of uranium, has cut supply to kind of wait out for higher prices. And more recently, COVID-19 supply impacts. Many mines have been shut down because of COVID. And some of the largest suppliers of uranium are buying from other suppliers to get uranium to sell to their customers. Uranium, there's some people are even saying it's running out and it could almost completely run out. What's happening at the same time as all that is demand for uranium is going up, and nuclear power is seen around the world as a good source of clean energy. It's controversial in some countries, but in other countries, they're like, we have to have this. And I'll go into why in a few minutes. But as you can see, the interesting thing here is you're starting to see similar things that happened between 2005 and 2007. Not the exact same things, but similar things happen that could cause a big run up in the uranium price. And the interesting thing with Denison Mine is the contracts could be in place closer to the peak cycle. So here was a peak cycle. And if you go over here, if you have another run up, Denison probably isn't going to be mining for like 2 or 3 years, maybe 4. And if the run up takes 2 or 3 or 4 years like it took here, Denison could be signing contracts during peak prices, which would greatly increase their value. And one of the last catalysts is nuclear energy is a must for well-rounded clean energy portfolio. This was I was talking about with the green and clean energy. Not many people know this because there's a lot of negative about nuclear, but nuclear is a zero-emission clean energy source. The heat released by fission creates steam that spins a turbine to generate electricity, and it doesn't have any of the harmful gases emitted by fossil fuels. Nuclear energy's land footprint is small compared to other sources of energy. So compared to nuclear, wind farms require 360 times more land to produce the same amount of electricity, and solar requires 5 times more space. And nuclear energy, contrary to popular belief, produces minimal waste. Nuclear fuel is extremely dense. All of the used nuclear fuel produced by the US nuclear energy industry over the last 60 years could fit on a football field at a depth of less than 10 yards. I think that's the positive. On the negative side, you wouldn't want to be anywhere near that football field after it's filled with that waste, but it doesn't take up a lot of space. One of the last things I have is this is important and it's not discussed anywhere. I just came across it and like researching from all different angles. Nuclear power plants are producing maximum power more than 93% of the time during the year. So this is where it's interesting in Texas. If you look at, if you think about clean and green energy, the things that people are considering are nuclear, hydropower, wind, and solar. So the natural gas is actually pretty clean, so it'll probably be used into the future. Coal may go away, never completely, but it'll start to go away. And then I think they also burn oil, so that'll start to go away. But this capacity factor, so nuclear provides very consistent power and it can provide it 24 hours a day. People use power possibly 24 hours a day. And when you have brownouts and blackouts, that's because you don't have consistent forms of power. So Texas recently, when the power went out, it's because solar and wind and coal and some of the other powers aren't as consistent. And if things go wrong, they become even less consistent. So if we go to more clean energy, which is at the end of the scale, like hydropower, wind, and solar, think about like when the sun's out during the day, you're providing power. And unless you store that power, it's not a consistent form of energy. So the only solution to make like using hydropower, wind, and solar work is to also have nuclear to be the more consistent form of power, while you kind of either have more storage for this power or have a lot more of it to make up for its lack of consistency. So all over the world now, many countries are building more nuclear power plants and making nuclear like a solid part of their nuclear portfolio. And that's everything I had.
Great, thank you, Rob, for that presentation. We're running a little behind, so let's do this quick. If you have questions, raise your hand or put it in chat. While you do that, I'm going to start with 2 questions of my own. What's the downside? What's basically for the stock, the fundamental value at today's uranium prices? Do you know that? Have you looked into that if the uranium doesn't go up?
So I'm getting numbers between like 120 and 180 from people's different DCFs analyses and other analyses. So that's one of the reasons I really like this stock is there's not much downside unless a bunch of nuclear power plants start to explode from all around the world. I don't see much downside.
Okay. Other question I had is you mentioned in there that the deal they did for, I don't know how much it was for, but it was 8 times oversubscribed. So that doesn't jive together with the fact that there were warrants issued, for me at least. I know there was a conversation in one of the rooms about that. So I just want to be sure that that's accurate, that it really was 8 times oversubscribed. Have you been able to independently verify that? Or if not, if anyone in this room has, just raise your hand and put a chat in there.
So I haven't independently verified that, but the amount of volume seen in Denison in the past few weeks is it's like an intense, it's like goes over the market cap of the company. So it seems like large institutions have bought massive volumes of stock after that raise at much higher prices than the raise. So I see that as a justification of the statement that it was 8 times oversubscribed.
Okay, very good. Let's go into the chat. There's a couple questions here. Let me see if anyone's raised their hand. Okay, so just a couple comments. Chris Hampton saying from 2003 to 2007, Denison ran from 30 cents to $15. Interesting tidbit there. Bart Watson, while the waste is minimal from nuclear energy, the extreme toxicity of the radioactive products and their extreme persistence with half-lives on hundreds of thousands of years presents a major problem of how to dispose of the waste safely. This may be a more significant concern than a potential meltdown. Can you address that concern?
So that's why I said, yes, you could store all the waste in a football field, but nobody wants to be anywhere near that football field. You basically have to put the waste in the ground and be hundreds of miles away from it.
Wow, is it really hundreds of miles? What's the radius, the safety radius?
I'd have to look up the exact, but
okay.
I think my whole presentation was more on the general side. To know all those exact details would take me some time.
Okay. Let's see. Robert Irvin, I think I saw DNN's units offering February 11th at 91 cents per unit, which includes a 2-year warrant for 0.5 shares at $2 a share.
Yeah, that's correct.
Do you think the hedging of this has washed out? Florian says warrants are not hedged. I'm going to read the comments because it's all related. Chris Hampton says, I believe they actually have an ATM in place as well. The warrants were at 2, which is very out of the money. There's a whole conversation here about that. So I don't think there's a question really for you there, unless you have a comment on that. Okay.
Actually, one final comment. Like when I was digging into catalysts for this stock, there's like an unlimited amount of catalysts as the world goes toward green energy. Nuclear just shines, and there's low supply of uranium now. There's high demand, and they're building more nuclear power plants. There seems to be an unlimited amount of catalysts for uranium demand, and that's why I could see this company being a great long-term hold.
Okay, great. We can continue the collaboration on this, Rob, in the DNN research group. Stephen will drop a link there into our chat. There it is. The continuing conversation, but we're running late, so we'll talk about that offline. Thank you again, Rob, for that presentation. Before we go to Trade of the Week, just want to look at our upcoming events. And this, again, you can go to storytrading.com and tap on events. All our future events are there. We put in our past events since January 1st with video, links to video recordings were available. We're going to go ahead at some point and put every event in there historically So at least you can see, you know, the schedule of events in the past. So we're not going to have the recordings of the old events before the start of the year, but I think that'll be interesting information to have in our archive. So now what you'll see if you go to storytrading.com and click on events is this Wednesday, February 24th, we have the CEO and CFO of KMPH joining us Wednesday at 4:30 p.m. I think thank you to John Sassone, I believe is from Raymond James for setting that up for us. Next week, we got Dan Carlson back from Tailwinds Research with his next stock pick. That's always going to be exciting. I think he's the top stock picker for us right now. And then another exciting event next Wednesday, Jonah Lupton of Lupton Capital, and he was also recently chosen by Shamith to run a portfolio for social capital. And we got Richard Chu, March 9th, the all-star lineup, the next several events, so you don't want to miss that. Happy hours are usually Wednesday, 4:30 p.m. So since we have these special events, as time permits, we'll do a short happy hour after those presentations the next couple weeks by KMPH and Jonah Lupton. So that's the schedule. Thank you very much, everyone, for joining us. If you want to hang out for Trade of the Week, we're going to get that started right now.